Hi everyone, welcome back to my channel. My name is Sean. So today in this video we'll be covering up the hedge funds. So in our last two videos we have talked about the overview of fund accounting and in the advantages and disadvantages of fund accountings. Also in the second part we have discussed about some key principles of fund accounting. From today onwards, and we'll be covering the specifically funds. So to start with this, I will be starting with the hedge fund industry. So this video will be covering up in few segments. We'll be talking about what is hedge funds, then we'll get into the who other people are involved in this hedge funds. Then we'll be talking about some things relating to fees, which is a very important in hedge funds. Okay, so and we will be also discussing why to invest in hedge funds. Okay, so keep listening. Okay, so let's start. Any idea what's hedge fund, and why do people are investing in hedge funds a lot nowadays? Let me tell you. See, if I go as per the definitions available over the internet, it says hedge fund is basically investment pool that pulls investment from the market to invest in various products. So it's, as I always tell you guys, not to go with the definitions all the time. Rather than that, use your own thinking. The logic should be same, but use your own examples. Because when you'll be facing the interview in the panel, they will be looking for the those candidates who are well versed with the logics rather than the definitions. So अगर मुझे पूछा जाए what is hedge fund, so I'll respond like okay, hedge fund is basically like a special club, okay, where high net individual people comes together and they put their money into that, okay, to trade in multiple securities like stocks, bonds, derivatives, etc. And there is a special person also who is responsible for utilizing their money to earn returns as much as possible. So basically these guys are called fund managers. Okay. So their main strategy is to maximize the returns. Even when the market condition is not good, these people tries to earn the rate of return, I mean the profit, as much as possible, as if they can also get benefited from this. How they will discuss on this. Okay, chalo. So this is if I talk so we just covered the definition part of the hedge funds. Now coming to the next part, which is why do people nowadays invest in hedge funds? Okay. So the question, the answer itself is in the questions. Okay. Hedge funds. It's basically there are few reasons. First reason is the hedging. That means hedge funds. In hedge funds, there is an option to hedging your money. Let's take an example once again. You have 100 rupees in your pockets. Okay. Now you are going and buying a direct stock. Okay. So that means you are buying a share of any XYZ company. You are directly putting that money. Rather than if you are investing your money, by the way, you are not allowed to invest in hedge funds with 100 rupees. Okay. For that you have to be high net individual, accredited investor. Okay. Okay, so coming back to that old topic, in hedge funds, if you are $100 million, so when you are investing in hedge funds, that means your money will be spread across multiple strategies. Okay, so that means if your money is not out of 100 million, maybe 10 million have been invested in some pharma. 20 million maybe in derivatives, maybe 30 million have been invested in other commodities, bonds, stocks like this. Okay, so that means your 100 million has been spread, it has been hedged across the all sectors. Okay, so if you are getting loss from one sector, so you might get benefited from others as well. Okay, So that's one reason of hedge fund, which is hedging. Coming to the second part, which is the profit. So in hedge funds, see, if people like you and me and buy a trade and buy a stock from the normal regular stock markets, how much return we can expect? Even if you put 1 lakh rupees in the market today, maybe after few days you might receive a return of maximum 5,000, 10,000. But in hedge funds, when you are investing lot of rupees, so you can expect to have a huge return also. Okay, don't forget there's a chances of loss also. Okay, but still people go for hedge funds because from hedge funds they can return huge amount of profit, plus their money can be spread across various sectors. Okay, so this is to answer why people are investing in hedge funds. Okay, now let's talk about what are those people are involved in hedge funds. Okay, so first I'm going to talk about the investors. They are not just the normal investor. They are like we call them accredited investors or high net individual people, not like us who earns in thousands or lakhs. So in hedge funds, if you you have to be like Tata, Birla, Ambani's, okay, to be, I mean to say, you need to have a lot of amount to invest in hedge funds. And why this criteria is set? So basically, today if I'm putting $100,000 in hedge funds, but next day if there's a huge loss, I'll be in a very bad situation. But for those people who are putting their money in hedge funds, they should be, their risk appetite is very good. Even if they are having $1 lakh or maybe $100,000, they are having a loss, but still they're okay because they know from next time or they can have a return more than this. So they are okay with this. Their risk appetite is much more than us. That's why this criteria has been set. Okay, so that was the first party who is involved, which is the high net individual investor. Coming to the second, they are the people who are responsible for managing the money. They are called the fund manager. So they are their job is to have that money from the investors and to put into the market in various sectors to earn as much as profit they can earn. Okay? Even if the market condition is not good at that time, these folks they try to earn good return, as if they can get incentivized from this trade also. Okay? One more thing that I want to talk about this, though we'll be covering this in the next few minutes also. Why do they people they does like this? Because as I already said, they try to get incentives from this. We'll talk about this in the next section. Coming to the third party, which is the fund admin, for which you are preparing yourself for the interview. So once you get selected in a company as a fund administrator, your job will be to cut the NAVs or to calculate the NAVs for your company, for your client. Okay? So you are also not directly but indirectly, I would say, involved in this hedge fund as a party. And apart from this, there are other parties as well, like the brokers, like the compliance, the auditors. There are a lot. There are a couple of more parties also. Okay, coming to our next topic, which is the fees, which is the most important thing in hedge funds. Okay, any idea about the fees in hedge funds? Okay, let me tell you. See, as we have already discussed, in hedge funds you need to invest a lot compared to like mutual funds. In mutual fund you can put 100 rupees at least or 500 rupees, but in hedge funds you cannot do that. So if I make a differentiate between the mutual fund and the hedge fund, the fee structure is huge in hedge funds. Of course, when there is a $1 billion discussions are there, so the fees will be in high also, right? So the main I would say the concept of fees in hedge funds is like people always ask you in interviews 220, what is 2 and what is 20. So basically there's a fee called management fee. The fund manager basically receives this management fee to manage the portfolio, manage the fund, okay? To run their operations in their end. They charge a management fee. This is also a fee which is calculated on the asset under management. Let me tell you one thing, there's a question in interview for this also, like what is a asset management fee, what is a asset based fee? So the answer should be it's management fee. Now how do you calculate management fee? So basically management fee should be calculated on the beginning adjusted capital. And what is it? So basically, suppose you are working on February month NAV, okay? You have just finalized your January 31st. So the ending of January capital should be your opening for February. Plus, if there is any subscription or redemption for the month of February, that has to be plus or minus with that opening capital. Then you will get your adjusted net capital, okay? Now you have to multiply that with the rate of rate for management fee, whether it can be 2%, it can be 1.5% also, depending on the SLA, service level agreement, okay? So that's management fee. Now let's talk about the performance fee. What is this? So performance fee is something which goes to the fund manager once again for generating a huge return. I would say if they can outperform, okay? So there is a benchmark called hurdle rate, high water mark. So if they can cross those things, they can incentivize from that fund also. What is this management fee or the incentive fee or this hurdle rate, high water mark? We'll be covering this up in our next upcoming videos in details, okay? So these are the fees that we have talked about. Now what comes? There's one more thing that I just wanted to highlight. In hedge funds, most of the hedge funds, I'd say, there are few strategies are involved in all the hedge funds, okay? Like credit distress, like event driven, like long short equity, like distressed investing. These are varieties of strategies are involved in hedge funds, okay? We'll be talking about these strategies also in more details in our next upcoming videos, okay? So this was just a short overview of hedge funds. Please let me know if you have any questions regarding this overview, okay? Please share your comments on the feed, on the comment section. I'll be happy to answer you if you have any questions. And don't forget, if you like the video, please subscribe to my channel, because we'll be covering a lot of new videos regarding the hedge funds, private equity funds, fees and strategies and many more on the upcoming videos. Okay? Chaliye, that's the end of this video. Tara.